A very good morning to all you dear students. Wishing you a beautiful day ahead. Children, we have started with the second book, Business, Finance and Marketing. You all are not seeing the videos I could see. And we are doing the first chapter, that is Financial Management. Already we have completed with what is business finance and what is financial management. Now in financial management we are today, what is the topic that we will be covering today is financial decisions. Now financial decisions refers to the decisions concerning financial matters of the firm. There are three financial decisions that has to be taken by the firm: investment decision, financing decision and dividend decision. So let us see what are these three types of decisions that has to be taken by the financial managers. Okay. So next is financial decisions, investment decision. Deciding investment of funds in long-term and short-term assets. In this, children, the businessman has to decide how much of long-term assets like building, like land, like machinery has to be purchased by the business and how much of short-term assets is required, that is how much of funds required for day-to-day working of the business. Next is financing decision, deciding the sources of finance, ratio of debt and equity. This sources of finance we have already done in standard 11, and we have known the various types of sources like the debentures, like the shares. Okay, so all these sources we have known. So here we decide how much of the shareholders funds is needed and how much of debentures to be floated in the market, what should be the ratio. And next is dividend decisions. Dividend decisions, deciding amount of profits to be paid as dividends. So when the company is making profit, so how much of profit to be retained, that is putting back into the business, and how much of profit to be shared as dividends to the shareholders, given to the shareholders. Okay, so these are the three types of decisions that the manager has to take. Next, investment decision. The first decision, what it is all about. It is concerned with investment of firm's fund in different assets. Just now I told you what are the different assets: long-term asset and short-term asset. Long-term assets are assets which stay with a company for a long period of time. It can be land, building, machinery, etc. Short-term assets, money or funds required for day-to-day working of the business. Now let us see, what does investment decision include. There are two things that it includes. One is capital budgeting decision or long-term investment decision relating to fixed asset, and working capital decisions or short-term investment decisions relating to current asset. So here two types of decision. One is termed as capital budgeting decision. Another is termed as working capital decision. So any kind of decision related to investment in fixed assets like land, building, just now I told you. So that kind of investment is termed as capital budgeting decision. Capital budgeting decision. Working capital decision means how much of short-term funds you need, or how much of day-to-day work that you will be doing, how much of funds required for this day-to-day work. So that is termed as working capital decision. Now investment decision, capital budgeting decision. They are very important, children. This is very important that you make a decision for capital budgeting, and you have to analyze various aspects. You have to be very cautious when you are taking this kind of decision, that is capital budgeting decision. Why is it important to make? Capital budgeting decisions are important because they affect the earning capacity of the firm over the long run. These decisions are very crucial for any business since they affect its earning capacity in the long run. The size of assets, profitability, competition are all affected by the capital budgeting decision. Next, B. These decisions normally involve huge outflow of funds. These decisions are irreversible. Now, children, when we talk about the capital budgeting decision, it involves a lot of funds. So, that is why when the company is putting a lot of funds, it has to be very cautious. Not only this, once you are putting in so much of funds, it cannot be reversed. That is, it cannot be sold off immediately. You take a land building today and tomorrow you cannot sell it off. Okay. So the thing is, you have to keep this fund blocked for a long period of time and it is irreversible. You cannot change it immediately. You cannot purchase and then sell it immediately. So that is why you need to take the decision seeing to it the positive and the negative pros and cons of the investment of such a big decision. And since it involves such a lot of funds, you need to be very cautious. That is, the businessman has to be very cautious, very careful in taking such a decision because it helps the businessman earn in future. It is helping the business earn in the future, that is it for a long period of time. So it has to be taken properly. These decisions must be taken with utmost care. So this is what is the importance of capital budgeting decision. Factors affecting capital budgeting decision: cash flow of the project, rate of return, investment criteria. Okay, so there are three factors that has to be taken care of when you are taking the capital budgeting decision. When the businessman is deciding to invest in long term and short term, what are the things it has to consider? Cash flow position. When a firm invests huge capital, it expects to generate reasonably and regular cash inflow. Such cash inflow should be carefully analyzed. So when the business is putting its funds in capital for capital budgeting decision, it needs to see that what will be the return, what will be the inflow of cash with this kind of an investment. Rate of return. The firm should compare the rate of return expected from different investment projects. So when the company is doing this capital budgeting decision, it will be comparing the various kinds of project. Example, 10% is expected from project A and 14% from project B. Then the firm will definitely prefer project B. Okay, because one project is giving only 10%, the other project is giving 14%. So which is giving more return, that is the investment that the businessman wants to make. Okay, next is investment criteria. There are various other criteria which are considered before selecting a particular project. Example, total amount to be invested and interest rates. Okay, so this thing, how much of money to be invested and what will be the interest, okay, that has to be paid if they are taking a loan or something like that. Okay, so all these things has to be considered before taking a capital budgeting decision. So you should know these three things, children. Factors affecting capital budgeting decision: cash flow of the project, rate of return, and investment criteria. 3. factors affecting capital budgeting decision. Apart from the above factors, the firm also compared the risk associated with the various proposals and prefer project with moderate degree of risk. You know there is risk in business. So when there is moderate degree of risk, that is something that the businessman is going to prefer. Next is investment decision. Working capital decision. So this is the second invest decision that has to be made. One is capital budgeting decision, another is working capital decision. So these decisions relate to investment in current assets like cash, inventories, debtors, etc., which can be converted into cash usually within 1 year. These decisions affect day to day working, liquidity, and profitability of the business. So, children, these kind of decisions are to be made so that the company is having some liquid cash or it is having some cash for day to day operations. So, how much of cash, how much of inventories, that is stock, to be held by the company, and how much of debtors, how much of loans to be given to the people, okay, so that immediately it can be converted into cash within 1 year. So this is what is termed as working capital decisions. Okay, so this is it, children, today. The next two decisions, that is your financing decision, and one more is your dividend decision, I will be doing in the next video. Okay, so at least this much you should know. What are the three types of decision that the managers have to take? Financial decision, what are they? What is the content in the investment decision, financing decision, and dividend decision? And also you should know what are the factors affecting capital budgeting decision, and also what is working capital decision. Okay, children, and you must see the video, children. You all are not seeing the videos, it will become very difficult for you to understand. Okay, so thank you to all of you. Have a nice day.